Investing in real estate-backed tokens. Real estate asset tokenization. Real estate has always enjoyed the reputation of being one of the most dependable avenues of investment. Parallel to this, it has also enjoyed a dubious reputation of being one of the most illiquid assets. In essence, it is surely profitable, but it is not quite easy to enjoy the fruits of that profit. Is there a possibility for real estate to retain its value, but at the same time enhance its liquidity? The answer lies in real estate tokenization. So what is asset tokenization? Tokenization has been in vogue only in recent years when crypto fundraising started to gain prominence. Classically, the term securitization meant what tokenization means in today's context. Tokenization implies the act of dividing a tangible asset into a discrete representation that denote a share in the asset. These tangible representations are called tokens, and since they are backed by security, they are called security tokens. The key difference between traditional securities and tokens are the fact that these tokens are stored in the immutable digital ledger called the blockchain. These tokens are tradable on alternative trading systems, ATS. Blockchain-powered asset tokenization allows investors to gain exposure to illiquid asset classes that would otherwise be difficult to invest in. Arguably, the most prominent use case for the tokenization of assets is real estate. In this lesson, you will learn everything you need to know about real estate asset tokenization and how you can get started with investing in real estate-backed tokens to gain exposure to this popular asset class. Blockchain technology enables you to invest in digital tokens that represent a claim on a physical asset, such as a real estate property, fine wine, or even artwork. Through the process of tokenization, businesses can raise capital by selling fractional ownership in illiquid assets to investors who want to gain exposure to asset classes that are otherwise difficult to access. For example, a property developer could sell real estate-backed tokens that represent part ownership in a recently built development. Asset tokenization refers to the process of taking a physical and/or illiquid asset and turning the rights to it into a digital token that operates on a blockchain. And just what can be tokenized? Well, everything. Here are some examples: art, collectibles, debt, equity, investment funds, vintage cars, music, real estate, luxury items, and even your very own brand. As you can see, the world of tokenization is vast and opens up entirely new investment opportunities for both retail and institutional investors. For example, say you would like to add art exposure to your portfolio but cannot afford to buy a Picasso painting for $60 million. In that instance, you could buy a digital token that represents a 1% ownership in a tokenized painting that is valued at $1 million for $10,000. Once the painting is sold for, let's say, $2 million at the next auction, your tokenized share in the painting will then be worth $20,000. Moreover, you would trade your art token in between auctions for whatever value you and a buyer can agree on, judging by how the art market for this type of art is performing. Creating a real estate token. Real estate tokens are designed to represent shares of a property. The total value of all the tokens is equal to the total value of the tokenized property. If there is a 10,000 M2 property worth $1 million, it could be divided into shares that represent 1 M2. There will be 10,000 such shares, each valued at $100. Alternatively, if you would like to make the offering even more democratic, you can even consider dividing the 10,000 M2 property into 100,000 shares representing 0.1 M2 each. Each share will be valued at $10. Tokenization also gives room to tokenize a certain percentage of the assets, so the owner retains the majority while they can raise funds for developing the property. This holds true in areas where people have large pieces of land but have no funds to develop them. How to offer your real estate token. The initial sale of real estate token or any other token backed by a security token offering, commonly abbreviated as STO, sometimes they are known as tokenized security offerings, TSO, or tokenized asset offerings, TAO. The terminology might be different, but the core remains the same. It is understood that an STO is not the same as an ICO. In an ICO, the investors are issued utility tokens and they have their value confined to the company's platform for the ecosystem. Security tokens are capable of standalone existence because the value of the tokens is tied to a real asset with real value. Security tokens can be marketed and sold in multiple methods, including crowdfunding, listing it on dedicated token platforms, social media, search marketing, and even messaging platforms like Telegram. A good example of a real estate security token would be the Aspen coin. This security token was designed to represent fractional ownership in the St. Regis Aspen Resort in Colorado. The campaign successfully raised $18 million, resulting in the creation of a grand resort. It is interesting to note that the marketing for this token happened through crowdfunding. Getting the token listed on an exchange. The value of a token is realized only when it is traded. Therefore, investors need to find their tokens listed on a reputed exchange. The number of exchanges that accept security tokens today might be quite limited, but the future looks promising as the numbers steadily continue to grow. The reason behind this slow growth is positive more than being negative. The exchanges that trade security tokens need to be compliant with regulatory requirements laid out by bodies like the SEC. This might seem like a cumbersome process, but the involvement of the SEC only ensures that the instances of fraud and malpractices are kept as close as it can be to zero. Another possibility is to list tokens is to partner with an alternative trading system. ATSs are FINRA-registered institutions that can partner with security asset token owners to list the tokens on the trading systems. This helps provide investors with access to the secondary market with a high degree of liquidity. The benefits of tokenization. Decreasing the barriers to entry for investors who want exposure to physical and or illiquid assets is one of the main selling points for asset tokenization. But there are more. Other benefits of tokenization include provides a new avenue for businesses to raise capital, reduces investment risk due to lower capital requirements, increases liquidity of illiquid assets, reduces reliance on costly intermediate to lower transaction costs for all stakeholders, increases transactional transparency for all stakeholders. Real estate tokenization isn't all about moving the segmented value of the asset to a blockchain. Tokenizing real estate comes bundled with a lot of advantages, both active and passive. One of the best factors contributing to the cost of rising real estate capital is the involvement of intermediaries. Intermediaries are indeed inevitable when it comes to establishing trust and handling counterparty risk. However, the first factor is effectively taken care of by smart contracts. The most obvious advantage of tokenization is, of course, enhanced liquidity. If we go back to the example that we were looking at, it might not be easy for investors to offer $1 million, and even if they had $1 million at their disposal, they would think twice about putting all their eggs in the same basket. With tokenization, however, investors now have the flexibility to divert a part of the capital towards an asset. In addition, it also brings in lots of small-level investors who have always been under the impression that real estate investments, and especially commercial real estate investments, are way beyond their reach. Since real estate tokens are traded on the blockchain, there is no specific trading window. The market operates 24 hours a day, 7 days a week, and 365 days a year. It also removes all of the geographical borders associated with real estate investments. A person in any corner of the world can invest in real estate projects anywhere, provided they meet the regulatory requirements and that investing in real estate abroad does not violate the legal framework of your country. The idea behind real estate tokenization is to enable anyone to invest in real estate without having to make a hefty down payment or managing a property. Tokenizing real estate is arguably the most popular tokenization on use case today. Real estate tokenization refers to turning claims to a physical property into digital tokens that can then be sold to investors to provide them with fractional ownership in a real estate asset. Buying real estate backed tokens feels like a combination of buying Bitcoin and investing in a startup at an online crowdfunding platform. Let's look at the steps. First, you need to set up a digital wallet that enables you to first hold the tokenized asset you want to buy. In most cases, this will be an Ethereum wallet that supports different types of Ethereum-based tokens. Next, you need to sign up for a real estate token investment platform that enables you to purchase tokenized real estate in the currency of your choice. Then, you browse through the tokenized properties that are available to gauge which one suits your investment goals and risk preference. Once you have found suitable investable properties, you proceed to buy the offered real estate tokens for an amount that you feel comfortable with. And finally, you store the tokens that you have purchased securely in a digital wallet. Use case real estate increasing liquidity and inclusion. Property tokenization is one of the most promising use cases of blockchain technology. With a total asset value of $228 trillion globally, real estate is a more valuable asset class than bonds and stocks combined. Despite the enormous market size, real estate is still an illiquid asset class with high barriers to entry. Previously, investors would have needed $7.83 million to buy Anna, which is a building in the western suburbs of Paris, meaning the average investor could not afford to participate in the deal. In a tokenized market, everyone could buy a stake in Via Anna with as little as $7.83. Increased financial inclusion will open up illiquid asset classes that have so far been out of sight for the average investor. One may argue real estate investment trust, or REIT funds, propose the same value proposition, but REIT funds often come with minimum investments and high upfront and brokerage fees. As investors can buy and sell tokenized real estate through digital exchanges, there are virtually no minimum investments and transaction costs are significantly lower. Top real estate investing platforms. Real estate tokenization is a popular blockchain use case, which is why there are several startups dedicated to the issuance and sale of real estate-backed tokens. Below, you will find a list of leading real estate tokenization platforms that you could use to invest in real estate tokens, such as Atlant, BlockSquare, Kokorikos, Liquify, Realty, Upretz, and Upvest. What is the future of tokenization? The global real estate market has a staggering value of about $228 trillion. The numeric value would be so long if represented with all of the zeros. This huge market was confined to a few accredited institutional investors before the era of tokenization. However, tokenization democratized the entire ecosystem, making the opportunities available to retail investors as well. Considering the need for liquidity and the globalization of trading, real estate tokenization is all set to be the order of the future when it comes to real estate investments. Now here's the bottom line. Real estate tokenization enables you to add real estate exposure to your portfolio without having to put a large down payment on a property, managing it, and dealing with tenants. Instead, you can gain fractional ownership in a property through the purchase of a digital token that you can hold in a digital asset wallet. While it's still early days in the tokenized real estate market, it may soon become standard to add investment exposure to a commercial property in Tokyo, residential housing in New York, and industrial real estate in Germany to your portfolio simply by buying 3 real estate-backed tokens on a digital asset exchange. People who understand the power of Bitcoin in this era will be one step closer to finding their financial freedom. As a disclaimer, this information is intended for educational and training purposes only and should not be construed as investment advice. As with all financial decisions, you should contact your licensed financial advisor before investing in any financial instrument.